Okay, what is up, traders? What's up, tycoons? Super excited for today's video. Going to give a last detailed update on TLT. But as always, before we do, I have a quick slideshow presentation I want to go over. Just warning you guys, we do have the Fed meeting coming tomorrow. It's going to be a huge catalyst. And then very shortly afterwards, we're going to get the next round of inflation data, as well as some major earnings. Okay, Amazon, Apple, Meta, all of these companies, Google, they all report earnings this week as well. So it's going to be a huge roller coaster. Starting the presentation off, per Bloomberg, hedge funds have loaded record high short positions in the U.S. Treasuries ahead of the FOMC tomorrow. They expect yields to spike, Dixie the U.S. dollar to surge, and SPY the S&P 500 to crash. This could be epic. So if you take a look here, this is actually that Bloomberg terminal data right here. And you see the aggregate treasuries, net non-commercial futures contracts, record short positions, okay? Record high short positions, the lowest they've been really since, they started tracking this over here in 1993. If we go into the next slide, we see though that, however, the bond market is calling the Fed's bluff. So that article says that they're extremely bearish. We'll see how it turns out. But so far, the bond market has been calling the Fed's bluff. Now, just so you can understand and visualize what I mean by that, we have the Fed funds right here in blue, and then TLT is here in orange. Okay, so just so you can understand how it works, when we had that period of free money, right, and the interest rates were very, very low, you're seeing that TLT in the bond market is going up. And what happens when the Fed funds rate increases? Well, that's when the bond market TLT starts to decline, right? And you're starting to see it make lower highs as the Fed fund rate is making higher highs. And right here, you can see the bond market and TLT start to go back up. And the reason being is that they cut rates and rates went down. Here recently, okay, we've had the most aggressive rate hike cycle in a very long period of time. And as a result, TLT has been dropping. But if you take a look here, TLT has actually been rebounding pretty well and really consolidating in an upwards range right in through here, while Fed fund rate is still going up. And, most people assume that they're going to do a 25 basis point rate hike next week, or not next week, but tomorrow. So it's really interesting to see that they're already pricing in that essentially the Fed is bluffing, and that they're not really going to keep raising rates as much as they say they are, or perhaps keep them as high as they say they are. It's almost 100% certain that we're at least going to get 25 basis points tomorrow. But the whole thought and the thesis behind it is that they're not going to continue raising rates and keep them as high as they think, and that the bond market is actually pricing in Fed cuts by the end of the year. Now, TLT has been a leading indicator for the stock market. So in this slide, what we have is TLT versus the S&P 500 futures. The S&P is going to be in blue, all right, and TLT is going to be in red. So notice here how we have these divergences where one is doing one thing and the other is doing something. So if you look here, the S&P 500 was rallying, all right, in the end and going into the beginning of 2022, right? So this is the December 2021. We see that the stock market S&P was rallying and going up, but TLT was actually in a decline. And this is why I say that TLT has been a leading indicator, because the stock market usually follows shortly afterwards. You have to remember the bond market is much more massive than the stock market itself. And, they're the ones who tend to normally get things right, right? If you want to look at the economy, it's typically a better idea to look at the bond market and look at the yield curve rather than look at stocks. Again, S&P going up, TLT going down, and what happens? S&P ends up crashing shortly afterwards. And same thing over here. TLT is going down, was making a high, lower high, and then the S&P is actually making higher highs here. And what happens is it ends up following what TLT was doing and crashes. Now over here, the stock market is going lower, right? We have a low, we have a lower low right here. Then we have a low, we have a higher low. And what do you see? The stock market ends up rallying and starting to follow what TLT is doing. Over here, TLT is going down, S&P 500 is going up. As a result, stock market ends up crashing afterwards. Now, that's what we've been doing here recently, right? If you take a look, the S&P has been rallying and making higher highs, but TLT hasn't been doing so. All right, we did see, we have taken a look on one of those first slides. We see that TLT is up, but if you look more recently, it started a downtrend while the S&P 500 continues to go up higher. So, will TLT continue to be a leading indicator? And is the market about to crash massively as a result of, TLT being a leading indicator? Remember, each time that it's been going down while the stock market's gone up, it ended up resulting in a pretty big crash, right? Multiple times, throughout the past year. The next slide is going to be TLT versus high beta stocks. This is SPHB, S&P 500 high beta stocks, and it's very similar, okay? Just pointing out the multiple divergences and how TLT is really the leading indicator. So when this is going up and TLT is going down, you see that shortly afterwards it ends up following. Even over here where this is making lower lows and going downwards, TLT was going up, and then what does you do? It got that pop right there. Same thing over here, it's going up while TLT is going down, and then it gets a massive crash. Going up while TLT is going down, and then there's a massive crash. If you look here, a lot of this rally here recently in the S&P and in the stock market is fueled by high beta stocks. And I talked about this a little bit in the previous video, but it's fueled by these high beta stocks, and there's been a lot of short squeezes as well as gamma squeezes in the option chain market. So that's really what has been fueling this drive. And, these big major earnings as well as the FOMC report could be the catalyst to really continue the stock market rallying, or end up having these divergences play out the way that they have in the past, where even when the stock market was rallying and TLT was going down, it resulted in a big crash in the market afterwards. So that's basically one thing. I personally think that things are going to crash really badly, and a lot of people aren't really going to be ready for it, but I'm not necessarily positioned that way. Waiting for more of the data to come out, and it's pretty risky, trying to place your bets before we actually get the Fed meeting. Now this is the Fed funds rate versus financial conditions. Remember that Jerome Powell's goal in raising the Fed fund rate, all right, has been to tighten financial conditions. So if you take a look over here, financial conditions and the adjusted national financial conditions are going to be in red and orange. And this is right around COVID. Okay, so you see financial conditions tightened a whole lot. And as a result, they had to drop the rates down to zero. Now, we haven't gotten to those elevated levels that we were in the past, but clearly you can see, once the Fed funds rate is real low, the, financial conditions really loosen back up, and we start tightening over here. And that's when we see these financial conditions tighten up. But if we go to the next slide, it's going to be the same thing, but just zoomed in a little bit. And we can see here that even though, the Fed fund rate has basically gone up a whole lot more since then. This is July, right? So we've increased by like 250, 275 basis points since July. And financial conditions have really just been consolidating and actually heading more in a downwards direction than they were over here, right? We were much higher at these levels than where we are currently on the financial conditions. So it's really interesting to see, is this something that's going to cause Powell to come in here and talk the market down because financial conditions haven't tightened like he wanted them to, and they've been raising rates for 6 months and financial conditions really didn't continue rising, right? We see here on the initial on the initial start of the rate hikes, we see that's when financial conditions really started to spike up and rise. But, they raised the basis points by a whole lot, the Fed funds rate by a lot. And those financial conditions have really just, consolidated and kind of moved sideways and aren't trending necessarily in the direction that Jerome Powell may want to see them going. The next one is going to be the stock market versus financial conditions. So same thing, we have the financial conditions up here, and then we have the S&P 500 here in this tealish blue color. And you can see each time this hit a peak, the stock market also ended up hitting a bottom and creating a new low as these made new highs. Now, again, what's really interesting is that we've increased the Fed rate by 275 basis points. And look at how, the financial conditions are really just dropping here recently. It's pretty strange to see, right? We see, as they start to go up, that's really when the market ended up starting to go down. And we have this is the famous Jackson Hole speech right here in the summer of 2022. And that's when financial conditions hit these lows and Jerome Powell tightened them. But since then, they've really gone down, and they did a whole lot of work in between then when it comes to raising the basis points of the Fed fund rate. This is a similar chart, but this is Fed TLT versus the financial conditions. we can see it's very similar. Okay, as this is going up, TLT is going down, and this thing has really started to decrease a lot here recently. Financial conditions have really started to loosen up, and as a result, we are seeing TLT starting to rise as well. Now there's a couple ways to measure some market sentiment. What we're looking at here is growth versus value. So this is SPY G, the growth sector of the S&P 500 versus SPY V, the value sector. And this is what conditions look like in a bull market. So in a bull market, you're going to be seeing growth outperforming value. And that's really a great example, right? This is the COVID crash over here. And there was just a quick dip. Okay. And then we quickly recovered, right? So, this is an example of a bull market, and this is a clear example of a bear market. All right, this is when growth is underperforming value. So if you're looking at this pair and it's going down, it means that growth is underperforming compared to value. And clearly we still are in bear market conditions, as this thing is still trending down even more. It has recovered a little bit, but we're not really seeing it in the bull market direction and bull market territory. The next one we're going to look at is XLY versus XLP. This is consumer discretionaries versus consumer staples. Very similar to growth versus value. All right. But just a little bit of a different metric. But yeah, this is your bull market over here, right? We're seeing consumer discretionary stocks outperforming consumer staples, right? Here's the COVID crash. It much more affected XLY versus XLP. And since then, this has been a great bull market and it was going up. And then clearly we get the bear market over here, and we're seeing XLY, we're seeing consumer discretionaries massively underperform related to consumer staples. So that's it for our slide presentation. We'll go ahead and hop into TLT. Since the last video on TLT, we've really done the same thing. Okay, we're really just consolidating right around this 106.33 level right here. We close a couple days below it, we close a couple days above it, but we really haven't made any major moves to the upside or to the downside. This Fed meeting is definitely going to be a big catalyst. And if we take a look at our MACD right now, we're very, very close to getting a sell signal. You can take a look over here. We got a sell signal off of MACD, and then that completed our wave one down to test this trend line that we've been testing multiple times. We got our original breakout retest, and we've came up, and we really started forming a bull flag consolidation. So we're starting to break our main structure that we've been looking at, but we really just haven't confirmed any type of direction yet. So originally, we're looking for a 1, 2, 3, 4, 5 move down, right? And then you get an ABC correction up. And then we were looking to start our 1, 2, 3, 4, 5 down, and things were following very good, right? We got our ABC up. We topped out at our 61.8% retracement level at 109.72. This is still a very, very important level of resistance that we need to get above ultimately for us to make a move to the downside, because otherwise we could form a double bottom and potentially an M pattern, right? And it would look something like this. If we, even if we come up some more and retest that level there, we could end up getting the M pattern if we keep rejecting 109.72. But yeah, so we were looking for this 1, 2, 3, 4, 5 down. We got the wave one down, we got the wave two up, and then as I said, we've really just started this bull flag consolidation here. Potentially we're going to be looking at the MACD for a sell signal or for some type of indication. Tomorrow we very well could see this thing curl up to the upside, and just indicate that, hey, we still have bullish momentum here. And if we break this trend line basically right here, okay, and we're able to break this trend line, that could be our bull flag breakout, and we could get a nice move, possibly up to about 112 on TLT. Now, if we end up getting that MACD sell signal and this thing curls down below, then ultimately we're going to look for our wave 3 structure down. Okay, and this is going to be targeting the first gap down right here in blue, which is going to be right around 100.5, and then the second gap down around 95.21 is really where we're going to be looking to target. If that happens, we'll end up testing this trend line again. This is the trend line here. We've tested it over here. We broke out, we retested it. If we come back down and fill this gap, we're going to be right around that trend line again. And that could be the completion of our wave 3 for another potential wave 4 bounce up, and then ultimately a 5 down, targeting about 80 to 90 on TLT. So yeah, just pay close attention. Okay. I know it's been tough. We've really just been consolidating and chopping these past couple weeks. And, direction and movement was a lot easier when we were getting our structures to the upside, when we had the move to the downside and got the sell signal. And then we got our MACD buy signal where the blue line curled above shortly after we tested our trend line and we caught the move to the upside. A lot of people really didn't expect TLT to have this much of a bounce. And now, it's been tough. Okay. A lot of people have just been anxious and waiting to, go long, waiting to go short. But ultimately, it's just a matter of waiting for the signals to see whether we're still going to follow this structure or whether we're going to break out of this structure. And if we do, it would look something like this. So instead of this being an ABC correction wave, this is now going to be a 5-wave impulsive move. And this would be our 4 down, and then a 5 up would be around that 112 area. So that's what I'm going to be looking out for. If we do that and we come up to like 112 to maybe even 115, then we would look for an ABC correction down before starting another 1, 2, 3, 4, 5 back up to continue going higher. So we'll see what happens. Lots of data out there. There was some very bearish data, as I showed you guys on that, slide presentation. When you take a look at TLT and the S&P 500 and you notice divergences, TLT has been a leading indicator for the market. We could see that play out again, and there could be a massive crash coming. There's also that Bloomberg data right there, and there's a record amount of short positions, and people are saying that the SPY is going to crash the S&P 500. The dollar is about to rage. So we'll see what happens. Okay, just be ready for tomorrow. And tomorrow may even be a good day to sit out, right? And just really take some stress off yourself, and just let things play out, see how the market structure develops, and see if we're going to have any fake outs. Okay, because right after that, we're going to have some major earnings from a lot of the top stocks in the stock market, and that too will affect the price of TLT.